Welcome to SGS's Sustainability Expertise interview series on greenhouse gas and climate-related reporting. I'm your host, Adam Hammis, the ESG Technical Business Development Director of SGS North America. Our guest today is Neil Stewart. Neil is the ISSB's New York-based Director of Corporate Outreach, working with preparers, industry associations, accounting professionals, and consultants to build awareness and understanding of the ISSB standards and SASB standards. Neil joined SASB in 2020, bringing more than 25 years of experience in and around investor relations and corporate governance. And he was previously at Citigroup as the VP of IR advisory on the ADR team, helping non-US issuers develop IR and ESG strategies. Welcome, Neil, and thank you for being on today. Can you please just briefly tell us, the listeners, who is ISSB and the IFRS Foundation?
Well, hey, Adam, thanks a lot for having me on, and happy to talk about the ISSB and the IFRS Foundation. So, the ISSB, the International Sustainability Standards Board, was really created in response to a market need and in response to market demand. Sustainability reporting has been around for decades, really, and increasingly in recent years, a lot of attention, a lot of work was being put into it. But there were clearly problems that needed to be fixed, especially with all the heightened attention around environmental and social issues. The companies were faced with costly, complex reporting and demands. Investors weren't really getting the information they needed. So companies, investors, policymakers, including the G20, the G7, IOSCO, the Financial Stability Board, were all seeking to get better, more decision-useful information, comparable information into the hands of investors, and they were seeking to simplify the alphabet soup of voluntary standards and frameworks that were really such a burden, almost overwhelming for preparers, for companies. And these stakeholders saw the IFRS Foundation as the right organization to do this, given that the IFRS Foundation had already done pretty much the same thing with the IFRS accounting standards more than 20 years ago. So the International Financial Reporting Standards, now used in 144 jurisdictions around the world. And the IFRS Foundation had become known for a transparent, rigorous due process in developing market-informed standards. So the market spoke, the IFRS responded, and in November 2021, the International Sustainability Standards Board, the ISSB, was launched, chaired by Emmanuel Faber. He's the former CEO of Danone, the French food giant, and with a 14-member full-time working board spread around the world, really. And we have offices in Frankfurt and Montreal. So a lot has happened since that launch in November 2021, and I'm keen to talk to you about it.
Absolutely, me too. And specifically, the two new IFRS or ISSB sustainability standards, they were published in June of 2023. The S1 standard, general requirements for disclosure of sustainability-related financial information, that's a mouthful, but that's the basis for determining like material topics for reporting, etc. We cover that in detail in another interview, but the S2 standard, climate-related disclosures, that's for organizations reporting specifically on climate risk. They're both included. They're not, separate, but it's specifically on climate risk. So let's talk about S2 because we're in this greenhouse gas series. Which companies are going to have to comply with the S2 standard and by when?
So the first thing to understand is that the ISSB, as a standard setter, we're not requiring the disclosure by companies using the standards. But what is happening is that different jurisdictions are beginning to incorporate them into their rules and into their frameworks, country by country. And I think a really good way to give you a sense of this momentum is to tell you about a few announcements that happened last summer, and really starting in a 6-week period or so with the launch of the standards on June 26th last year, 2023, S1 and S2, and very shortly, July 6th, the Financial Stability Board, which was the G20 body that had set up the Task Force on Climate-Related Financial Disclosures, the TCFD, they announced that S1 and S2, the IFRS new sustainability standards, were the culmination of the task force's work. The task force's work was done. They were handing over responsibility for monitoring climate risk disclosure to the ISSB and sunsetting the task force. But then the really major announcement came on July 25th, and that's when IOSCO, that's the International Organization of Securities Commissions, announced that they were endorsing the IFRS sustainability disclosure standards S1 and S2 for use by their members around the world. That's 130 of regulators around the world, representing 95% of the world's market cap. This is big. This announcement is big, and the only precedent was just over 2 decades ago when IOSCO similarly endorsed the IFRS accounting standards, and again, now used around the world. So this marked the beginning of a tremendous amount of activity. Since then, we've seen about 15 different jurisdictions formally announce and embark on consultations, on setting up the mechanisms, on moving towards bringing the ISSB standards into their frameworks. Brazil, Canada, UK, Japan, Malaysia, Singapore, many significant, very significant markets have embarked on this. Now, I think I should mention, the SEC rule, the new SEC climate rule, as also a significant milestone, very much aligned with the ISSB standards. And this is by no means a coincidence. The SEC is an important stakeholder of the ISSB. They're a member of IOSCO, significant member of IOSCO. They sit on the ISSB's, or rather the IFRS Foundation's public monitoring board. And the new SEC climate rule is built on the TCFD recommendations, as is the ISSB climate standard S2. The SEC relies on the financial materiality lens, what matters to investor decisions. So does the ISSB climate standard. The SEC relies on the greenhouse gas protocol. So does the ISSB standard. So in this way, I think that you can really see this common language taking shape around the world, built on the TCFD recommendations, based relying on the GHG protocol, financial materiality lens, yielding decision useful information for investors, really now circling the globe. Having said that and talked about this regulatory adoption and this march towards rules around the world, we also expect to see even sooner very significant voluntary application of the standards. And why is that? It's to meet investor needs. The investors have long been calling for SASB and TCFD disclosure. The ISSB is the evolution of that, and so we expect that companies, in order to meet investor needs and also to get ready for mandatory disclosure in different parts of the world, will be voluntarily adopting the ISSB standards. But you're asked, like, when do they have to start? So far, we have not seen specific dates or mandates for the standards kick in. The standards were effective as of 1st of January this year, so they're available to use. And we expect to see the first real reports coming out in spring 2025 on 24 numbers.
Thank you. And I know the USA is still more on the GAAP side, but like Canada, for instance, they're drafting their own CSDS. Do you want to talk about the process? Because it seems like the majority, you mentioned a lot of the jurisdictions, it seems like it's a majority of the developed world subscribes to IFRS. And so is that true? And what is that process? What steps have to happen for those jurisdictions to adopt their own, phased in translation of IFRS?
Yeah, well, Canada is a good example. As you say, they're an IFRS country, and it's true that really pretty much the whole world outside the US uses the IFRS accounting standards for financial reporting. And so there is a natural fit there. I mean, I should note that the ISSB standards are GAAP agnostic. They can be used equally well by US companies using US GAAP and really tying together the financial statements with sustainability reporting. But you're right that there is this natural progression for IFRS countries, 144 around the world, including Canada. That process will look different from one jurisdiction to the next. It depends on the legal framework. It depends on whether there's the existing accounting standard setter might be bringing in the standards, or maybe there's a new accounting standard setter, as in Canada with a new Canadian Sustainability Standards Board. And then there's the regulatory action needed. In some countries, it might be listing rules. In other countries, it's regulation from the securities regulator. And this is the case in Canada, where the new Canadian Sustainability Standards Board has kind of imported the ISSB standards and based new Canadian sustainability disclosure standards upon them. But in the future, the Canadian Securities Administrators, the group of regulators, will be the ones to actually require and eventually enforce sustainability disclosure in Canada. So that's one example of many different types of paths that the jurisdictions are on around the world. And something that's quite useful, I think, and will also be of interest to preparers and users of information alike, is an adoption guide that we're publishing. And that is really an adoption guide for jurisdictions, how they can get on this path, how they can proceed on this path.
Fantastic, and thank you. Beyond jurisdictions, companies, now that they see this coming down the pipe, do you have some examples of any companies already using the S2 standard, or maybe trying to pre-align with the standard itself now that it's out and available?
So we're starting to see some early applications, companies doing some basic mapping, gap analysis, and reporting some of that. It's really too soon to say, given that the standards only came out in mid-23 and that January 1st this year is the effective date. We're not seeing real ISSB reporting yet. But as you point out, what we're seeing are the precursors. There's so much use already in the market of TCFD and SASB. In fact, the SEC's final rule pointed out that 78% of the Russell 1000 are using SASB standards. Half of them are using TCFD recommendations. If we look, our own records looking at the S&P 500, 450 of the S&P 500, 90% of the S&P 500 are using the SASB standards. And companies doing TCFD and SASB are really well on their way to using the ISSB standards. The ISSB standards are the evolution, the next step, if you will, and really incorporating, building on both TCFD and SASB. And importantly, what we're seeing early examples of is investors asking for the ISSB standards, including in proxy voting guidelines, such as from BlackRock and Vanguard, also in stewardship policies or other documents from, for example, the Norwegian sovereign wealth fund, Norges Bank. So you're starting to see more and more the same investors that had long asked for TCFD and SASB switch over and start to move towards asking for the ISSB, recognizing it as this global language.
Fantastic, thank you. I want to talk about what's exactly in the S2 standard really soon, but you touched on it. I want to talk also quickly about the history. Can you walk me through a little more about the alignment of the standards? There was integrated reporting, SASB, TCFD, they became the Values Reporting Foundation, ultimately IFRS. What about that history? Kind of why did it happen? How did it happen?
Sure. Well, there was a sense of urgency here, right? That we really needed to move quickly on things like climate reporting, as well as social issues. And the ISSB didn't have time to start with a completely blank sheet. The ISSB needed to use and build on what was already widely in use in the market, what had been successful for companies and for their investors as users of the information. So the ISSB actually, we merged the SASB, the Sustainability Accounting Standards Board, as well as the International Integrated Reporting Council, IIRC, into the IFRS Foundation, along with the Climate Disclosure Standards Board. That was a project of CDP. So these organizations and our employees became part of the IFRS Foundation as we set up the ISSB. We also really incorporated the TCFD recommendations, and as I mentioned before, have inherited the responsibilities of the task force from the task force and through the FSB, the Financial Stability Board. So this is a matter of organizational consolidation, but it's also consolidating the standards and frameworks to simplify, trying to reduce the alphabet soup.
Yeah. Well, how long did that whole process take when IR, SASB all became, was it 10 years, 2 years?
It happened really quickly. I mean, the ISSB was set up at the end of 2021, and by mid 2022, all these organizations were part of one foundation.
Yeah, fantastic. I don't see the other voluntary standards on this list. You know, there's GRI, the UN SDGs, now there's CSRD regulation coming out of Europe. How does this process align with those other standards?
Well, it's a great question because there are a lot of different uses and audiences for sustainability disclosure, and we take what we're calling a building blocks approach. So the ISSB is establishing the global baseline of information of high quality sustainability disclosure for investors, and that's what you find in financial reporting. Beyond that, there is other types of disclosure and other types of stakeholders. And that's where you might think and place, for example, corporate reporting around the SDGs, sustainable development, or the GRI standards, which are really very multi-stakeholder oriented and focused a lot on impact, a company's impact, quite aside from its connections to its business. So this is our a depiction or an illustration of this building blocks approach with the information for investors at the core, and then outside of that, you start to see how you can build on other requirements, other types of information, whether that's a company doing it or maybe a whole jurisdiction doing it to meet the needs of other stakeholders. Again, Point to Canada is, I think, a great example of this. I think it's really interesting how Canada is adopting the global baseline for investors to be consistent, comparable globally. But Canada has its own unique characteristics and requirements that they might build in the future. For example, around Indigenous people's rights and reconciliation, or maybe around the resource sector or smaller caps or public-private type of issues, or public sector. So you start with the global baseline that we all share, and then different jurisdictions can build on building blocks as needed.
Well, thank you. I mean, you mentioned this briefly earlier. I want to come back to it, that these changes were made. Some people are already, a lot of companies, confused by all the acronyms, the alphabet soup of ESG and sustainability. But you brought up this point. It's intended to have real benefits. It's for the reporting organization. So what are some of those clear benefits that they were hoping going through this process and this kind of combining into standards for IFRS? What were those intended benefits?
So I'll come back to the two core principles or goals that we have. And the first is to streamline, to simplify, to make this process more efficient and cost effective for preparers. This has got to be achievable, not just for large companies in developed markets, but for companies of all sizes and stages of development around the world. So that was one of the most important things about the standards. Then the other aspect, of course, is to get this decision useful information into the hands of investors. So what the ISSB standards do is really try to facilitate for preparers the identification and how to identify and how to recognize the business relevant risks and opportunities, and then the associated material information that can help investors understand those risks and opportunities. But going beyond that, if you think about what you have to do next, with even once you've done that materiality assessment, what happens next with the data, and gathering the data and reporting it, you need to have this strong control environment. You need to have governance around the data. And the ISSB standards are really designed to help with that, designed to do that. In the past, voluntary standards and frameworks didn't necessarily consider that investor grade data necessity of what, if, for example, if it's going into a regulatory filing, what kind of characteristics that information needs to have to be, for example, assurable. So ultimately what you get then is being able to identify the risks and opportunities, be able to have the controls environment around the data, and then be able to allow the preparer to then provide their investors with comparable, consistent, reliable information, and really allow for this dialogue between companies and investors that ultimately will drive capital, right, around the world in terms of and especially
Absolutely.
to where it's needed. Yeah.
Well, I know we're going to get into what's in the standard. I have one more question, but just because TCFD, I think it was the most cited framework for climate-related disclosures globally, and it has been. People often ask, will TCFD still exist moving forward? Is it being completely replaced by the S2 standard, absorbed, integrated? How would you describe TCFD's future?
So the TCFD recommendations were no doubt brilliant, right? I mean, and especially exactly what was needed. Very concise, very high level, principles based. Some of the founders themselves, founding members of the Secretariat, have said they wanted a standard that fit on one page, and they did it. And it was fantastic in the way it was taken up around the world. But when you get to that point of how do you get this into regulatory filings? How do you assure this? That's where the ISSB picked up the thread and essentially turned the TCFD recommendations into a reporting standard, into something that's assurable. All that said, though, the TCFD recommendations are still there. There is still that one page, that beautiful one page of 4 pillars and 11 recommended disclosures, right? It's and it can still be used by companies if that's what's appropriate. In fact, it's actually written into many laws and rules already in different countries around the world, or in different places like California, where the new bill SB 261 calls for TCFD reporting, or equivalent like the ISSB standards. So in answer to your question, the TCFD recommendations have not disappeared. They're still they can still be used by companies, but they're also very much built into the ISSB standards, and that's what can take them to the next level.
Perfect. Now let's jump into the meat of it. So what's in the S2 standard? What exactly are companies being required to report on?
Well, let me tell you first about S1. And I have to do this because an important point, you can't do S2 without S1. S1 is like the conceptual framework, establishes the reporting entity, the boundaries, the identification of risks and opportunities, and all that you need to really start building out your report, whether it's climate only and climate first, or whether it goes beyond climate. So S1 is this foundational standard. It seeks disclosure of the material information about sustainability related risks and opportunities. And I emphasize that material information. If it's not material, the standards don't call for the entity to report it, right? So there is that materiality test around any of the requirements. And we're seeking to have this disclosed alongside or with the financial statements, so to really allow for that connectivity. One of the groundbreaking things about S1 is we've taken the architecture of the TCFD recommendations, these 4 pillars of governance, strategy, risk management, metrics, and targets, and applied them across the whole spectrum of sustainability. So climate and social, human capital, and so on can be reported on through this lens of the 4 pillars. There is a requirement for industry-specific disclosure, and we'll talk a little bit more about that later, maybe. But there is a requirement that companies identify risks and opportunities and relevant information by industry, and helps in the sense that it points to sources to do this, including actually requiring the preparer to consider the SASB standards for industry-based information. So, and as I said before too, gap agnostic. So as a conceptual framework, does not have to be used with IFRS, but can be used with, for example, US GAAP. So then if you move on to S2, so this is where it gets specifically into climate. climate requirements around what to disclose around climate-related risks and opportunities, fully incorporating the TCFD recommendations. And if you look, we actually put out last summer, we put out a comparison table comparing the TCFD recommendations to S2. And you can really see that if you're doing S2, you don't still need to do TCFD. It fully encompasses the TCFD recommendations. What have we added? Essentially, I like to say we've colored in the lines. We've added the detail necessary to be truly comparable, consistent, and assurable, right? So if you're disclosing a climate goal, what are the characteristics of that goal do you need to really help investors really understand it? Does it include offsets? What's the time period? What scope of the company does it cover, and so on? Same things, things around, for example, scenario analysis, or a transition plan. It kind of helps color in the lines. This is very familiar. It's going to be very familiar to people who are already doing TCFD in that it, for example, covers physical and transition risks and other common terminology. And again, there is a requirement for industry-specific disclosures. And the topics and metrics from the SASB standards related to climate have been built in as industry guidance. So the preparer shall consider those topics and metrics as at least as a starting point.
Can you share any examples of what is a climate-related industry-specific disclosure?
Sure, good question. So I'll give you one. Actually, I'll give you an example that is in illustrative guidance accompanying the standard. So this is a good example here. Let's take, say, an automaker, a car maker, for example. And one of the topics from the industry guidance is fuel economy and use phase emissions. Basically, what is the fuel economy of their fleet, of the cars they're making? How fuel efficient are the vehicles? And this is an example of a topic that could be considered a transition risk. That is how the company is taking steps to meet changing buyer preferences, adapting its business model. But you could also consider it a climate-related opportunity, the company innovating to meet or even exceed regulatory standards, and as a result, getting an increasing share of the market. So that's a good example related to S2, the climate requirement. You might also start to think too about social issues for going beyond climate, to go past climate. And in there, again, you would rely on the SASB standards, and you might look to a topic, say you're an asset management firm, and you look at diversity, equity, inclusion, and not just as a metric for the metric's sake, but how is it driving performance? How is it driving improved decision making? How is it driving the ability to attract and retain talent, for example? So those are a couple of examples of topics that are relevant to a company's prospects, and then for which they can find the relevant material information to then disclose to investors.
Thank you. And personally, I'm really excited to see the shift to reporting these material topics by industry. It feels more custom, it's more relevant, but some may not and do not feel that way. And if someone looks at industry-specific guidance and feels it's more confusing, or they say, why can't you just give us all the same clear rules? How do you respond to concerns like that?
Well, let's take a look at some of the benefits of industry requirements, right? If you think about it, this is how investors analyze companies. It's how they construct their portfolios. It's how they make stock picking decisions, even voting decisions. It's you've got sector-based, industry-based analysts who are doing a lot of this work. And it's also how companies can really tie sustainability factors to their business model, right? If you start to think about what really is driving a company's prospects, what's what matters to its profits, to its revenue, to its balance sheet, to its risk profile, and thus access to capital. And you start to zero in on those specific factors that really have a tie-in to the business. What it ultimately does is it reduces the universe of possible topics down to a much more manageable size. If you look at the SASB standards across 77 industries, it's an average of 6 topics and 13 metrics per industry. So you really get that focus, a much more manageable, more efficient set of topics and metrics to so it's going to be more efficient, cost effective to gather the data, to manage it, assess it, to assure it, and ultimately to report it. So those are some of the ways that we see the SASB standards helping companies, not adding to their burden, but rather getting them a head start on a materiality assessment, narrowing the focus, really helping both companies and investors surface what the data that really matters to performance.
Thank you. So it's simple, it's streamlined, and it's effective essentially now. The adoption can be over time, but are there exceptions for companies who don't feel they're ready? Is there any leeway given to companies if they're just starting out, if they have any difficulty in reporting to the requirements of the standards? What are those if they exist?
Sure. Well, this is actually an important part of the standards, and this was an important consideration for the board. It's also an important consideration for the regulators like IOSCO, who want the standards to be realistic, practical, achievable for all markets and for companies of every size, every stage of development. So there's some really important, what we call transition reliefs built into the standards. And that includes what we call climate first reporting. That is in year 1 of using the standards. A preparer may only report on climate using S2 as well as the relevant parts of S1, but only reporting on climate. And then in year 2, start to look beyond to other sustainability related risks and opportunities, be they social or human capital or so on. The other relief is the timing of reporting. So in year 1, you can report with your half year results or in the middle of the year rather than at the beginning of the year with year-end results. Another relief is with scope 3 emissions. Year 1, you can omit scope 3 emissions even if they're material, given the difficulties companies face around the quality and availability of scope 3 data. So that's on the transition relief side. The other thing that we've built in is what we call proportionality mechanisms. And again, we really wanted to balance companies' needs and their readiness with the investor needs for information. So we introduced the concept of reasonable and supportable information available without undue cost or effort. And it's being used by the IASB in financial accounting, and it really helps companies disclose where there's a high level of measurement or outcome uncertainty. And then the other proportionality mechanism is the concept of skills, capabilities, and resources available to the company. And that helps a company, for example, apply qualitative instead of quantitative approaches in some instances. So this really helps apply the requirements in a way that is proportionate to circumstances. So one area, for example, is in financial effects of some sustainability factors. Maybe when a company's starting out, rather than putting a number on that, they think of that in a qualitative way, and then move to more specific numbers over time. Or similarly with scenario analysis, you might think about qualitative in the beginning and then start to get specific numbers over time.
Thank you. So it's not only simplified and streamlined, but there's a stair-step approach that you can kind of dip your toe in the water and keep going if you don't get too scared. So fantastic. That's right. What do you see as the maybe overall to the marketplace, but maybe it's a broad, 2 standards cover a lot of things, but just with the S2, maybe for the climate standard, what do you expect or maybe even hope for the impact in the marketplace?
Well, this really is bringing consistency and rigor to climate data and doing it on a global scale. So there's a lot of people, a lot of work being done on climate, comparing companies' performance, comparing and looking at impact on the environment. But the power of a common language is so great, and this is what the ISSB standards do, is they give companies the efficient tools to disclose really transparently on climate related and other sustainability related risks and opportunities. And then really importantly, it gives investors the confidence to build that sustainability related and especially climate related data into decision making. And all that provides for strong foundations to the capital markets and to the global economy. I think this is really the where you start to see the biggest impacts at a global or systemic level. But even at the company level, when you come down to the thinking of the C-suite or the board, or even at operational level, using the ISSB standards can really help align a company's financial performance with sustainability performance. So taking the sustainability metrics and building them into overall strategic objectives. And it's really important that when you think about this, this is not just about data. It's not just about compliance or disclosure. It is about driving performance. And even in terms of communication, it's really important that companies retain the ability to communicate their sustainability performance in a way that fits with their business model and is clearly understood by their stakeholders. So it's not just about data, but it's really about telling a strong story. And that's where the ISSB standards allow for this common language, really clear framework to help companies present both their financial and non-financial information in a way that really explains how they're creating value and into the long term as well.
Well, given that, would you say there's benefits to companies using the standards, even if they're not located in a jurisdiction that requires it? Because you made some pretty compelling reasons there.
Well, that's a great point. And to build on those reasons, if you, for example, think about U.S. companies, right? Now, U.S. companies are looking ahead to the SEC requirements. If they're large companies with business in Europe, they're looking at the CSRD requirements in Europe. Wherever they are, whoever they are, they know that mandatory reporting is coming. And the ISSB standards are being seen as a no regrets approach to bringing that accounting discipline to sustainability data, which has typically been much less structured than financial data, bringing that accounting discipline to create investor grade, assurable reporting, and using this globally accepted standard. And this is also a point we mentioned before, that is to meet investors' needs. Investors have been calling for TCFD and SASB, now asking for ISSB. So by using the ISSB standards, you're meeting the needs of investors. And then finally, you've got this. It's like a global passport, a global language for sustainability that you can use wherever you do business, with customers, with suppliers, maybe with local regulators if the local rules capture you. So and if you think about the power of that, reducing the risk that comes with gathering and reporting data in different ways, and not just for the company, but up and down your value chain. So that I think that's, you can start to see the ISSB standards as a bridge to other requirements in other countries around the world. So it's a no regrets approach to coming mandatory reporting. It meets investor needs, and it is a global passport.
Well, I'm not going to steal more of your time because this has been fantastic, but I do want to just say and remind everyone, we've been talking with Neil Stewart, Director of Corporate Outreach for the ISSB and the IFRS Foundation. thank you, Neil. We really appreciate all the work you do and taking the time today to share with us about the new IFRS or ISSB, S1 and S2 standards, but specifically we kind of dove into the S2 standard for climate-related disclosures. But just thank you for your time.
Thanks a lot, Adam.
Well, I want to also thank all of our listeners. We'd love to hear your questions in the comments below, and you can find links to more information in the description. I'm your host, Adam Hammis. I invite you to subscribe to our SGS North America YouTube channel for over 100 videos and 100 hours of free content for any organization navigating their own sustainability journey.